Good morning, and I warm welcome to our in-person and online participants to this policy dialogue on affordable clean energy for businesses and households. What is the role of the EU's financial instruments? Organized by the European Policy Center and supported by the European Investment Bank. My name is Stefan Sipka. I'm head of EPC's Sustainable Prosperity for Europe program, and I'll be moderating this discussion, where indeed we will discuss about how to move towards affordable and clean energy. As we know, what Draghi was already, Mario Draghi was saying in his report is that if we decarbonize our energy system, that should eventually lead to lower energy costs, which is good for climate, which is good for competitiveness. But of course, that is a journey. We also need to recognize that there are short to mid-term costs, capital investments, and these costs can also be, say, transferred to to those who are the users of energy, of electricity, and other sources of energy. And we need to account for that when we move forward in this transition. We need to see how will the energy transition affect our businesses, our citizens, our residents, and to think about policies and financial instruments in particular that can help in this process. There are multiple policy initiatives thus far that could be good to bear in mind. So, of course, the Clean Industrial Deal and lots of previous initiatives before that, but starting with the Clean Industrial Deal, the Affordable Energy Plan, Energy Affordability Plan published earlier this year, and a number of other energy-related initiatives. Yesterday, of course, the grid package has been released, and I think we are all kind of trying to see what its implications are. But for today, I would like to focus indeed on the financial instruments, investments needed to make our energy both affordable as well as clean. So yeah, let's hope we will have a good discussion in the next 2 hours on this. We will first hear from our distinguished panelists, followed by quick reactions from our respondents, and then I will be happy to open the floor to our participants for a Q&A session. And just to say, I would invite you to already, for our in-person participants, to think about your questions already, and for our online participants to write your questions as soon as you can think of them, so we can address as many questions as possible by the end of this discussion. So, without further ado, I would like to introduce our first panelist for today, Nicola Pochettino, Director from the European Investment Bank on Energy and Climate. Nicola, thank you for joining us, and happy to hear about your initial reflections on investing in affordable and clean energy.
Thank you, Stefan, and good morning to everyone, ladies and gentlemen. I'll go straight to the point. We all would agree that this is a pivotal moment for the energy future of Europe, and there are many reasons for that. When we talk about affordable, clean energy, we are not only talking about the climate imperative, but we should think of it also as the bedrock of our competitiveness, social cohesion, and strategic autonomy. And the European Investment Bank, together with the European Investment Fund, we are a group. We consider ourselves the EU's climate bank. We have a roadmap for that. And for us, energy is at the heart of the transformation that Europe is experiencing. But today, I would really like to focus on how the EIB's contribution is helping this transformation, this energy transition to take place. We published in early October our new energy sector orientation. It's an evolution of the energy lending policy that you might be familiar with. It was already 5 years old, and it's basically a new framework where we built a discussion on and a strategic orientation on how we want to tackle the energy transition. And our commitment is anchored on 3 strategic objectives. The first one is really competitiveness and affordability. We put this first because we want to signal the relevance of competitiveness in the context of the energy transition. Of course, another objective is the climate and sustainability. This is intrinsic in our work as a climate bank. And we don't want to leave aside the issue of security and reliability, which is our third pillar in the energy sector orientation. So these objectives, they guide basically every euro that we invest, every project that we support, and also every partnership that we forge. Maybe I can give you just an idea of the volumes that are connected to our investment. And we have financed a significant share of the infrastructure that underpins Europe's internal energy market. Not only Europe, also outside, but let's say the role we played in Europe has been particularly significant to deliver sustainable, secure, and affordable energy to millions of businesses and households. In recent years, we clearly stepped up our ambition. As I was saying, 5 years ago, we had a new energy lending policy that where we basically declared finally that we were phasing out from financing unabated fossil fuels, and we kept this promise. The new energy sector orientation strengthened this, and all new energy financing since then have been Paris aligned, or aligned with the Paris Agreement. In just 4 years, if we look back at 2021, where we were investing around 15 billion euros a year in energy, we moved in 2024 to 31 billion euros. It's more than double our commitment to the energy sector, and this investment span across several subsectors of energy: renewable energy, clean energy, low carbon energy, energy networks, clearly, but also energy efficiency, as well as innovation. And now we're stepping up also the support to the manufacturing chain, to the supply chain of the energy sector. So the first point I would just like to touch upon is the one of competitiveness. And of course, affordable clean energy is fundamental for Europeans' competitiveness. It's one of the foundation. The problem here is high volatile gas prices and electricity prices. Why are they important? Because they are basically putting the European industry, particularly those that are energy-intensive sectors, at a disadvantage vis-à-vis our competitors outside Europe. And I don't think I'm making a too bold statement when I say that as long as electricity prices remain largely linked to natural gas prices, investment in direct electrification technologies is held back. So we want to electrify our system. But today, if I'm not mistaken, I'll give you a round number, 20% of energy, the energy we use is electricity. I think Commissioner Jorgensen mentioned that we should target half of our energy to be supplied with electricity, through electricity. We are working towards that, but you can understand that the ambition is very high. So, of course, decarbonization remains Europe's most promising pathway to lower energy prices in the longer term. We'll not only do that, we'll also strengthen our energy security and will allow us to take a lead in clean technologies if we are behind those, if we are developing them. And last but not least, will help us also improve our health and quality of life in general. So there are many side effects of investing in the decarbonization of the energy system. But I would also mention that the European Investment Bank is a public bank that cannot work alone. We need to work with the private sector, and we need to attract investment from private investors. This is because the investment, the energy infrastructure are so big that they need to scale up, and the public intervention cannot be absolutely enough. But the private sector need to be put in the condition to work and at a faster pace and scaling up the investments. So in this context, we are trying to help, for instance, also on specific contractual proposition that could help this happen. And we have just approved during the course of this year a counter guarantee for to support power purchase agreement, particularly for mid caps, for all those enterprises that are in difficulties, or they don't have enough credit rating to get a guarantee from the bank to purchase electricity at a stable price, at a lower price for a longer period of time. This is part also, if you have read the Draghi report, you will have seen that the power purchase agreement is clearly one of the instruments that could facilitate the development of clean energy and also the reduction of the energy bills. We are trying to work on that as well. Another element, if you allow me, is about energy efficiency. As I said, we want to electrify our businesses, our households, but at the same time, there are sectors, there are areas, I'm thinking certain part of the transport sector, for instance, that cannot be easily decarbonized, or electrified. So when we cannot use electricity instead of fossil fuel, then we should try to slash the consumption of fossil fuels. We should then invest more in energy efficiency. And we are doing it with our plans for housing, but we are doing it also for small and medium enterprises. We have a program for energy efficiency for small and medium enterprises that plans to have over 3 years up to 17.5 billion euros dedicated to that and mobilize investment for about 65 billion euros by 2027, so that we improve the efficiency of industrial processes and reduce the consumption of fossil fuel energy in those industries. I cannot leave aside, and it was mentioned before, the role of grids. I'll be very brief, but we need to recognize that we cannot simply build new renewable power plants. We need to connect them, and we need to make sure that the supply is secure, that the grids is sufficiently redundant, so that we have electricity at all time. And to do that, the EIB last year alone invested 8.5 billion euros in grids. We calculated that this mobilized more or less 30 billion euros, that in our calculation is about 40% of the total needs and the total investments during that year. Just to give you a number, we invested something equivalent to the entire transmission network of France, 107,000 kilometers of grids last year alone. And we are probably going to repeat these numbers this year, if not exceed them. Of course, some of you, I was discussing before with the DSO entity representative, every time we put €1 in a grid, it's an additional cost for consumers. So you may tell me, why are you saying that this will help us to lower the bills? In fact, I think ENSOE recently published a study where they calculated that over the longer term, of course, the immediate short-term impact is an additional cost. But over the longer term, thanks to the addition of renewable, to the better functioning of the grids, to the larger connection across the electricity system in Europe, every euro put in a grid will help us save €2. So this is something that we strongly believe in, and that's the reason why we welcome also the efforts of the European Commission with the new European grids package that should foster, accelerate and give better condition for a more rapid introduction of new grids, which Europe desperately needs. And in terms of and I'm going to close quickly, but maybe one thing that should be clear, being a bank, and because we're discussing today also in financial instruments, I would like just to remind that the EIB, like other banks, also commercial banks, we can propose a large palette of instruments, from the direct loans that are the most common that all of you know, to intermediated lending. So, for example, for smaller entities, very small DSOs, we can lend to banks that then should repeat the favorable conditions to the smaller entities. Where that is not possible, there are solutions that go more in the direction of equity or quasi-equity type of products. But of course, the important thing is that we are able to de-risk the investment. And de-risking simply means that we try to make viable, financially viable, an investment that normally would scare away investors. This is one important task that us, together with other entities, donors, and grants that could come from the Commission or from member states, we should be able to make this project absolutely viable. So, I mean, to conclude, I would say that this energy transition that we keep talking about, it's not a dream. It's really a concrete vision that we all want to make happen. And actually, to our mind, at least in the IB, we think it is happening now. And I'll be very happy to hear from the other panelists their views and see how to do even better than what we have done so far. With this, I stop here and I'll let the others introduce their speech. Thank you very much.
Thank you so much, Nicola, for your introductory reflections and also highlighting some of the ongoing activities and investments and projects you are working on when it comes to energy and also energy affordability, and just also highlighting the vision of the EIB for the way forward. I'm happy to come back to some of these points as we continue the discussion. But indeed, let's also hear from the representatives of different sectors that are part of this discussion, naturally so, on energy affordability and the clean energy transition. So I would like to introduce Sorcha Edwards, Secretary General from Housing Europe. So thanks for joining us. And how does the clean and affordable energy look like from the housing sector?
Yes, thank you very much. Although we are heading towards the holidays, people are starting to think of their break. It's actually very good timing, this event. I'm very happy to be here. Also because the work will actually intensify for us next week, because we will have the Affordable Housing Plan released on the 16th of December. So, and I'm hoping that the fair energy transition will really still be at the heart of that plan, because what we have seen, let's say, doesn't indicate that so far, but we really hope that we maintain the integrated vision of the clean energy transition being tackled at the same time as the housing crisis, because I think if we lose this link, that would really be a pity. I first wanted just to reflect on the European Investment Bank. Obviously, it's a key partner for Housing Europe's members. They are very diverse, so they are all the different public, social and cooperative housing providers spread over Europe, 43,000 of those, 50 million homes. And they work to different degrees, of course, with the assistance of a European Investment Bank as partners, of course, in a fair energy transition. One actually is a very inspiring example where exactly the type of funding you referred to, so the technical assistance through the Elena Fund as used by the Flemish social housing providers. So thanks to Elena, they have rolled out solar power on all of the social housing in Flanders. So it's the only country that's managed to do that on the whole sector. And they've also managed, and this is also not so easy, they've managed to make sure that it's directly reducing the bills of the households. Because very often, because of technicalities and rules around sharing back to the grid, very often you're limited to only common areas, so only producing energy for the common areas. But they have really managed to directly reduce the bills on a vast area. So how they worked with Elena was technical assistance, so getting all of the legal and technical advice in place, and then of course they had to guarantee that the investment was made. But I think that turned out to be a very interesting tool, and we hope that will continue to be indeed funded, because our Flemish member found that very useful, and we think there's potential in other countries to build at scale. We also see, and I think this is crucial when we look at, you talked about price signal. So in the housing sector, it's absolutely clear that we have to optimize the existing stock. So the CO2 of a new build compared to renovating or converting existing buildings is obviously, the CO2 used is vastly higher. And so we have another example where the EIB has stepped in. We have a massive problem with empty housing, for instance, in Italy. So they are working with the public housing provider in Reggio Emilia with a loan combined with cohesion funds to convert housing that obviously honestly needed much more than just energy retrofit. So it is housing that has become out of use. And you have in Italy, you have actually to 20 million homes, also in the private sector, out of use. But in the public sector, it is also a case because of underinvestment in the sector. But they have managed to draw down that finance, blend it with structural funds, and carrying out a conversion of those buildings. So I think what we really hope is that the EIB could help to de-risk those type of projects. So because we hear still that the price signals still indicate that very often demolishing is actually still more cost effective. And I think this really has to change. And I think it will only change if we step in from the EU side to really de-risk and help get more of those projects off the ground, to also help on the technical side as well. I mean, conversion of offices, we see some examples of that happening, but not nearly enough. I'm not saying we don't need new supply. We definitely need new supply, in some countries more than others. But also we have to have clear data on the empty buildings and the potential for conversion. We have another excellent example, slightly different approach in France. So the EIB has recognized indeed that there is an excellent intermediary. So in Italy, the problem is we have Case Depositi Prestiti, but they don't fund the public sector because it is seen as too risky because the rents are too low. However, in France, we have a very effective public bank, Caisse des Dépôts, who has stepped in at national level and made an alliance with Council of Europe Development Bank and the European Investment Bank to speed up the let's say blending of those funds, and to increase the amount of funding to local projects on the ground, and to diversify those projects, because thanks to the CAB, those projects can have higher social dimension as well, and obviously many of those are linked with renovation. I mean, the renovation of social housing in France is vastly faster than in the private sector, similarly to the Netherlands as well. So I think these type of partnerships, we have to see how they can be even more simple, how we can work with the next MFF and see where from the EU level there can be an added value. Obviously, some countries much more than others. Where this fits, obviously, Housing Europe, we're working on a theory of change in housing. I mean, none of us have to look very far to know that housing is dividing societies, dividing families, generating inequalities. I think we can all see that. Inequalities between countries, between groups, between generations, and it's growing. I mean, the most extreme, obviously, homelessness, but hidden social housing exclusion, obviously, a growing problem and fully recognised now at EU level. It is also a source of excess emissions. So the theory of change is really, and we see it can be done. We see examples all the time of very often when we take the profit accumulation, profit extraction driver out of real estate. So we see in the cooperative sector, in the community-led sector, in the public and the limited and non-profit sector, we see where this can actually come together. Housing can be a force for good. We can include elderly people, include young people, and we can have the right finance in place to make sure that it's for people and the planet, so we can have renovation. And we track it with our last state of housing. You can all check it on our website. The last state of housing, we were tracking the rate of renovation. It's a very mixed picture, I have to say. So we made 4 million renovation commitment for 2030, and 2025 was halfway, and we have to say it's a mixed picture. So the renovation rates, many of them are going down. If we don't have to look very far, indeed, Belgium, the funding cuts from public funding on the Renolution campaign, they're not going to meet their targets. So we see lagging also Germany, Ireland, Sweden, Italy, for economic reasons. You can check the state of housing for that. But we see Austria, France still high on their targets on climate-driven retrofits. We see slowdown in Netherlands because of infrastructure and affordability issues. Denmark steady, and Slovenia modest, but quite steady. So it's a mixed picture. But we also see, I don't want to take too long, but we had our last week a decarbonisation summit. So we see also the, let's say, so it made us realise how much of European legislation is impacting the sector, from the Bioeconomy Act to the Circular Economy Act to the Energy Efficiency Directives, the Energy Performance and Building Directives, and they're all coming together on housing. But indeed, I know you want to move on, but it came up that this combination of the technology on the supply side, so looking at geothermal, looking at heat pumps, and then combining with, let's say, energy efficiency, but in a cost optimal result. We've seen now examples from Hamburg where reducing energy consumption by 2/3 instead of 1/3 increases investment cost by 2.5 times. Mm-hmm. So these are calculations coming through from Germany, comparing deep renovation to a combination of renovation with grid, local solar production, with heat pumps, with geothermal. So we see, let's say, a growing interest in the potential of local energy production to produce the affordable energy transition that we need. And with the grid, I'll just finish up with the grid mention. Indeed, since I've worked on this topic, so it's over 10 years that we're working on the decentralized energy production. And I'm sorry, but the same problems are still coming up in some countries. While we see big jumps ahead, for example, in Flanders, we still hear issues in Denmark and Germany of grid access, permitting, indeed, a big backlog of Germany in permitting of local storage. So ongoing, let's say, bureaucratic or technical issues that really are unacceptable when we see the emergency that we're in. But at the same time, progress in Sweden, so the efforts on microgrids. So now in Örebro, they have 20% of the housing, public housing stock. They've managed to stay off the main national grid for 8 months of the year with local DC voltage microgrid. And with storage and inbuilt solar. So we're seeing that these microgrids are really the way forward to take the stress off the national grids, but it's not moving fast enough. And in some cases, it's even in Netherlands, we're actually permits for housing is actually stopped because of instability of the national grid. So obviously, housing and grid, you don't automatically see the links, but we really see housing has to be a part of the energy grid, and it's still moving too slowly there. So thank you very much. Hope there were enough.
Thanks a lot, and happy to come back to a number of points that you mentioned, but also just the last thing, the link between the permitting, but also the grids, and also how it can affect the local storage, and also that kind of also is connected with the renovation and the affordability, so that we kind of need to look at the bigger picture. But thanks also for highlighting also some good practices from Belgium, from Italy, also in France, but also what truly is challenging are the cuts, not in all member states, but still across the union, that we need to be mindful of. Maybe one thing that just wanted to ask already, we mentioned in the French example, low rents, right? And that it is also the link with the question of investments. Maybe
Italy.
if you can, if you can maybe just clarify on this link between low rents and investments or incentives to invest, and how does this translate to different national
specifically, so you have in let's say some member states, you have so-called cost rental in the limited profit housing development, and there we see, for instance, in Austria, in that rent, there is also a say investment plan for renovation. So. Where you have a cost rental system, you have a broader group of the population, so people on higher income, usually with rent supplements from the welfare state coming in to supplement those who aren't able to cover the cost. However, in the public housing, how it has developed in, let's say, particularly Portugal, Italy, and in Spain, they are rents linked with income. It's a residual sector, so it's directly funded by the public purse. And therefore, when you have limits, particularly now limits in public debt, there's automatic strain there. So they would be extremely low rents and therefore difficult, no viability case, no business model, let's say, for maintenance, even basic maintenance, never mind renovation. So indeed, it's something we are exchanging a lot on, different viability business models for renovation, but also obviously delivery of housing in a limited profit way, which we need more of.
No, thanks for clarifying on this. And of course, there is also a question around, say, the Climate Social Fund and the ETS2, but we can come back to that later, because it can also be an interesting discussion on affordability as well as on financial instruments looking ahead. But thank you for now. And then I would be happy to hear, say, on affordable and clean energy from the business perspective from Agata Zalewska, Energy Policy Advisor, Business Europe. Please, the floor is yours.
Perfect. Thank you very much also for the invitation and putting together this quite diverse panel. So thanks for that. I mean, it's a really broad question. I think when we talk about energy and business, we have a bit two stories. And I think EIB already a bit alluded to the first story. The first story is that we have businesses who are innovating, developing solutions for the clean transition. And this is the clean tech clean tech sector, the clean tech growth that I think EIB also alluded to. And I think this is great. I mean, this is something that we can really be proud of as Europe, that we have this technological leadership in these technologies. At the same time, and this is a bit the second story, that we have businesses who, for instance, don't really have a business case to decarbonize. And they might be, for instance, these energy intensive sectors who are providing the materials for the clean tech sector. So yeah, in a way, we have two stories, and they are both true, and they are both true at the same time. You know, that we have both sectors who are developing these solutions. There are also the sectors who are either missing the solutions for their specific economic activity or find it difficult to adopt these solutions. And yeah, both of these stories are true. When you think about it, it seems like we have the right policy framework, right? Because we have businesses who have the solutions, we have businesses who miss the solutions. But I think what often happens is that, yeah, there is this missing link. And this is where the policy framework and this kind of overarching policy framework for competitiveness really comes in. So yeah, how to make sure that the businesses who are developing the solutions, that they can grow, continue to export, to innovate, to provide new solutions. But it's also about how the sectors that cannot really adopt these solutions can do so, whether it's, for instance, by de-risking investments, removing all the single market barriers that exist now in Europe, and again, importantly, making sure that energy prices are affordable, because we see that a lot of these decarbonization solutions, they are still more expensive than conventional technologies. And this is one of the important barriers, I think, to further decarbonization. I think, EIB also mentioned it already, but again, it's good to keep in mind that when industry competes internationally. I mean, we have just substantially higher, structurally higher energy prices, 2 to 3 times to US and China. And I think what is also worrying is that we don't expect that these prices will go down anytime soon. So in a way, we're in a scenario where for the next, short, medium, potentially also long term, we will be with the structurally higher prices. And this is worrying for competitiveness reasons, because these kind of price differences really matter when you're competing internationally. And this is something as Business Europe that we looked at. So how will this transition look like in terms of energy price developments until 2050? And I have also a couple of slides to show, because I think the previous speakers also substantiated their points with data. I also I'm very a fan of this approach. So I have a few slides to show. What perhaps before I get to these slides, something to keep in mind with the study, because we looked at 2 transition scenarios until 2050. And what's really important to underline is that both of these scenarios that we looked at, they assume reaching climate neutrality by 2050. This is something that we did not want to question. It's something that we support, and we want to reach the goal. We were looking with the study about how to reach these goals in the most cost-effective way. So basically, how can we ensure that this transition is more competitive for businesses and for Europe in general, rather than less? And we came up with 2 transition scenarios. One that was we called managed transition scenario. It's in a way a scenario where everything goes smoothly in Europe, where we don't have permit delays, where we invest heavily in renewables, in low carbon technologies that we need, in infrastructure as well. So it's a scenario with quite a good supportive policy framework. We contrasted it with a frustrated transition scenario. This is kind of a business as usual scenario where we still reach climate neutrality by 2050, but it will be done with more delays, for instance, on the permit side, on deployment of technologies, less integrating energy markets. So both of these scenarios will reach climate neutrality, but again, with different set of policies. And I think it's interesting to see, for instance, on energy demand, in terms of which technologies will then be needed for the transition until 2050. Perhaps you don't see well on the slides. There's a lot of small numbers and data. For us, one of the key takeaways is the yellow bar. This is electricity and electrification. You see for both of the scenarios around 2050 that strong electrification will be needed in order to reach climate neutrality. That's a fact. What we also see is that beyond electrification, beyond electricity, there are these other colors on the bar, and this is the role of hydrogen, biomass, biomethane, that even in this managed transition scenario where we don't have delays, we do everything kind of in a way perfectly, other technologies beyond electricity will also be needed. And this is why I think recommendation number 1 for a competitive energy and climate transition and affordable is to take into account technology neutrality. So to have an overarching policy framework at European level that really supports all the technologies that we will need in the long term. Then when it comes to prices, and this would be also recommendation number 2, we saw this is the calculation of retail power prices until 2050, again for these 2 scenarios. What comes out quite strongly, especially in 2050, 2040, is that one scenario has cheaper prices, and this is the managed transition scenario, where we do everything more efficiently, we invest heavily in renewables, in infrastructure, etc. So for us, this is also recommendation number 2, and one of the important takeaways is invest heavily in all the necessary generation, necessary infrastructure, because this is in the long term, this will get lower prices. And I think this is where it's also important, all the de-risking instruments that EIB mentioned, like the PPA counter guarantee scheme. I mean, this will not be the silver bullet, but it helps in the whole overall policy framework to get to the investments that are needed. So this will be also an important recommendation, kind of recommendation number 2. At the same time, and this will be recommendation number 3, we see that when it comes to the electricity generation costs that were calculated, even in this very optimistic managed transition scenario where we do things very well and very efficiently, there will still be a gap in the electricity generation costs between Europe and third countries. And here we have US, China, and India. The gap will be lower in our optimistic scenario because it's a scenario with cheaper prices, but it will still be there around 50%, potentially even higher in this frustrated transition scenario, 2 to 3 times higher. So again, one of the recommendations here would be, even in the case of this perfect managed transition where we do everything well, there will still be a gap that, especially for those sectors competing internationally, would somehow need to be managed. So this is all about really managing this carbon cost differential, energy cost differential with carbon leakage measures, other type of measures. I mean, we already have quite a big arsenal in the EU. But this is where other measures beyond just investing in the energy system will be needed, especially for those sectors who are competing internationally, and they will be faced with these kind of policy, with these kind of price differences. So yeah, with that, I think to conclude, again, I think we have a bit 2 stories that are somehow often a bit mixed, but I think it's important that we look at both. And when it comes to the competitive energy and climate transition, I would have 3 recommendations: tech neutrality, invest massively in renewables, low carbon technologies, infrastructure as well. And third, don't forget carbon leakage measures, energy competitiveness measures that will probably still be needed even if we do everything well. Thanks.
Thank you so much for inputs, also for sharing some of your findings, which is also good to bear in mind from your perspective, also on different scenarios and how they affect energy competitiveness and affordability in the long run. And just indeed this concerning when we look at the frustrated transition scenario about the costs and looking ahead, we're already facing high energy costs, but that this will persist in such an alarming way. But also the energy mix that you mentioned, that indeed it's clear that electricity is main, but there are also other mixes. But that is again linked to the fact that some of them are, if I remember from the slide you shared, that some of them also still include natural gas and fossil fuels to an extent, to a smaller share. But this is exactly what is linked in a way to higher energy costs at the moment. So, and they are driving the marginal cost of the entire electricity bill in the end. So it's just I guess a comment that kind of we need to see how that mixes with affordability, notwithstanding that there are capital investments to also reach the clean energy transition itself. But I would be happy to come back to some of these points afterwards and see how we can kind of explore further the synergies between clean energy transition and affordability. But now I would like to turn to our next panelist, Fernando Dominguez, Senior Coordinator EU DSO, to hear from your perspective from the energy distributor system operators. How do you see this transition towards both clean and affordable energy?
Thank you very much. I mean, is that for those of you who are not so familiar? I mean, the DSO entity is the association of DSOs created by a legal mandate by the European Commission, with the idea to support the Commission in bringing the perspective of the DSOs into legislation and regulation. Can I have the remote? Thank you. Okay, and I have also put some slides together. I think that one big thing when we think about the whole clean energy and so on is that from the grid perspective, it has generated a massive change, a complete change in the paradigm. Okay, until the 1990s, what you had was these big generation plants that actually then went to the grid and then went to the household, completely unidirectional. That with the idea of more renewables, with more decentralized system, what you end up having is that, especially the grid of the DSOs, needs to go in both directions. Needs to go from the transmission system to the households, but also needs to be able to bring some of the generation or some of the flexibility that's been generated in those households higher into the grid. Okay, then obviously from the perspective of the DSOs, that means quite a big change. And to add into the mix, a lot of the changes that we are having are being driven by targets from policy, coming from policy. Okay, for example, we all have now a big target on renewables, and we expect that around 70% of those renewables are going to be connected to the distribution grid, okay, which, to what I was saying before, that really changes how you structure that grid, and also what is that you are asking, what kind of services you are asking from that grid. Okay, and equally, when we start thinking about electric vehicles, heat pumps, the whole electrification is something that needs to be facilitated, and it needs to account for the fact that then the distribution grid has to be much more carefully managed. Okay? Because before it was just a passing through system. Now there are going to be much more variations. For instance, if everyone decides to arrive home and put their electric vehicle to charge, suddenly you have quite a big peak in demand that you need to manage that before didn't exist, or at least not in the extremes that we are considering now. Okay, then I think that from here, I will only say two things when it comes to DSOs. I mean, DSOs are very heterogeneous around Europe. Okay? You have countries where you only have one distribution company. Then you have the extreme example of Germany, where they have 860. Okay? And also there are big differences in sizes. Okay? There are in total around 2,400 DSOs in Europe. Our association has around 800 of those. And you have to think that among the members of the association, you have some of them with 30 million connections and others with 30 connections. Okay. They are being asked to provide exactly the same services. Then when it comes to developing of any kind of financial instrument, that creates a problem. Okay, because they don't have access to the same kind of financial markets. They don't have the same level of financial savvy around them. Okay, and it's one thing that we are speaking quite a lot with the European Investment Bank. They are suffering with us on the development of those potential financial instruments. Okay? Then that is one thing, but also another point is the huge volume of investments. We say there will be around 400 billion until 2040. In the grid package, the Commission indicated yesterday that they expect that DSOs will have to invest around 700 billion until 2050. Then it is around 2/3 of the whole investment in electricity will need to happen at the distribution level. And obviously, that will have an effect on affordability, always taking into account that grids are around 1/3 of the electricity bill at this moment, with the other third being generation and another third being taxes, give or take. Then, obviously, if we have to do all these big investments, we will need to figure it out on how to deal with and how to make it affordable. Because when we are thinking about affordability, okay, there are three big questions from the perspective of the DSO, and this is very strongly linked with the risking of these investments. Okay. The first question will be, when do we invest? Second is, when do we recover the investment? Okay, those things obviously need to be linked to in some way, but they don't need to be exactly the same. And then is, how do we use the public money to deal with affordability? And in terms of when to invest, here we can have the issue with the risk, because you can say, okay, we can wait until the demand materializes. Now we know what we need to invest exactly on, and then we invest on it. But obviously, that investment takes several years to be put in place. Okay, I think that in the grid package, they were indicating up to 8 years. That could be the investment on the DSOs. On the other hand, you have the situation with anticipatory investments in which we do that investment ahead. Obviously, that has a higher risk that some of that capacity is not being fully used. We think that that's not a big risk, given how much we expect the demand to increase. It's highly unlikely that a big chunk of any investment remains unused. But it is, you have to balance in between those things. When to invest is going to be crucial. Then the recovery. Well, if we do a lot of the investment ahead, what you will have is exactly what Nicola was pointing out, that is that maybe in the short term you have an increase on the cost, but that can be managed. Obviously, if you try to manage it, it will come at a cost, financial cost and it can be dealt with in some possible ways to ensure that you are actually recovering the money from the people who are using the grid and for the people who you are building the grid for. And that is strongly linked on how to use the public money. Okay. I think that in here, you will expect that I go with the rant around give us grants in such a way that we can make it more affordable. However, that's not the only way. There are many ways of using public money to facilitate this. For instance, if we want to reduce the risk around doing this anticipatory investment, the public money can also be used to facilitate electrification. Okay? Such a way that what you do is you bring the demand to ensure that it materializes, to reduce that risk that the demand doesn't materialize. You can also use it via the European Investment Bank, okay, to facilitate that we can have loans, not only us, but also those related to electrification. Public money can also be used to kind of smooth the effect on bills, okay, in such a way that we are not recovering the money directly from the consumers in the short term, but we are recovering from these public funds that will be returned to the public purse in the longer term once that the demand materializes. Okay? Then there are different ways that we can use that public money. Then I think that obviously the DSOs can do a lot around affordability in the sense that we need to ensure that we are being as efficient as possible. A lot of that effect is going to depend on how regulation and how the access to financial market is for the DSOs.
Thank you so much for your reflections on the situation on energy affordability from the DSO perspective. Quite a number of interesting points indeed you made on the challenges that are there and the importance of the recovery and the entire duration of the cycle and the importance of public funds one way or another. And of course, notwithstanding the importance of the grants and the state support. Just one thing on let's say curbing the demand for electricity and investments, let's say energy efficiency. One could imagine that, of course, that makes sense to go for energy efficiency, but from the distributor's perspective, that can also result in a reduced demand, which could be affected in a lower income depending on the business model, right? But is there something? I mean, it can be more than that. But if you could shed more light on that dynamics.
Yeah, I mean, obviously, one thing that is crucial is that when we do the planning of the grid, okay, we need to consider what is the level of efficiency that we expect from buildings, from processes, and so on, and then that level of efficiency will be built in such a way that we don't create more grid than is strictly necessary. Okay? It's not that we are advocating for as much grid as possible. It's possible that in some cases you don't need the grid, and we will build what we need. And obviously, when you are estimating the demand, one crucial thing is what is the level of efficiency that we can expect on different areas. That in that respect, that will be crucial. Yeah, DSOs, we are regulated companies. Then the recovery of the costs to a large extent is safe, okay, but yes, is one of those things that we need to be quite careful on considering and balancing those risks around efficiencies materializing or not materializing, and whether we can actually provide the services based on what we have estimated.
Not to challenge the importance of energy efficiency and renovation and accounting for not to overexpand on the grids, but more like to be, I guess, to be mindful of all the intricacies as part of the transition and how do we get the best out of it. Thank you for these reflections. And then last but not the least, Aleksandra Palinska, Executive Director from the European Sustainable Investment Forum. So happy to hear any initial remarks on your side on the role of financial markets and investors on, say, to drive clean and affordable energy transition.
Thank you very much, and hello everyone. It's a great pleasure to be here today. Maybe firstly, let me tell you a little bit more about our organization for those of you who are not familiar. So Eurosif, the European Sustainable Investment Forum, we are a Brussels-based European organization. And well, in short, we represent the voice of responsible and sustainability-oriented investors. So obviously, I would say here this topic, which is so, I think, essential for a just transition, obviously, is quite an important one. I think I have the privilege of speaking after you, and I think so much interesting things have been already said, which is great because I can maybe just focus on certain things and I would say underline some of what I believe are very important points. So firstly, Nicola, thank you so much for your comments and views. Indeed, I think here the role of European Investment Bank is really crucial. And indeed, I would like to say that yeah, I mean, in order actually to mobilize further the private capital and investors, and, you know, I would say here, especially asset owners that can actually indeed provide the long-term patient capital, which is necessary for infrastructure investments. Yes, this is, you know, here the huge potential, right? So we really definitely need more of this kind of guarantees, de-risking schemes, blended finance. And I think this is a very timely discussion because, well, as many of you know, the multi-annual financial framework of the European Union is still being negotiated. And I think I would say one concern there is that I understand that the amounts that are currently actually foreseen for the clean transition are really, really small compared to what we really need. And obviously, you know, even on the kind of European Investment Bank side, obviously you guys also need this money in order to create all these wonderful financial instruments that can be then later used to further actually leverage the private capital and actually increase by, you know, I would say multiple times than the financing available. I think, you know, here a good example I think that I've seen in terms of the data provided is that I think targeted public funding leveraged 8 to 12 times private capital in several Invest EU projects, for instance, prove that smart use of EU funds drives scalable financing. And obviously, I think, you know, I also have some good examples, you know, in terms of the European Investment Bank, but I think, you know, Nicola has been already sharing quite a few of them as well. And obviously, you know, this is really crucial. At the same time, I think if you look at the amounts that are currently foreseen in the EU budgets for defense, are, you know, such a huge multiplication of also, you know, those actually funds that are considered for the green transition. And, well, of course, we need to have the defense, you know, for the general security. But exactly, let's not forget that here we're also talking actually about strategic autonomy and actually energy security, which is crucial for the business, for the economy, for the citizens, and actually to prevent, you know, also financial crisis. So I think, you know, there is still further rethinking actually to do in terms of, you know, how we can, I think, you know, better balance this out and ensure that, yes, within the EU budget, there is actually enough financing for that. Then another quite important point, and here maybe I'd like to actually, quote something that has been in a recent Financial Times article, which actually was focused, I think, on the EU Innovation Fund, and a spokesperson for Cleantech for Europe, estimating and actually sharing some data that businesses have reported spending 3,000 hours on applications to the EU Innovation Fund. And I think that was compared that if carried out by one person alone, this would be equivalent to more than a year and a half based on the EU's 36-hour average working week. I think this is also, another big problem. And for me, this is so striking that what we've been, so as Eurosif, we've been quite involved also in the work on, the Omnibus 1, aimed, supposedly on simplifying rules. But, the crazy thing is that actually, so the first thing they targeted were the rules, and I would say then result and have impact on the data, which actually investors need to make transition investments, right? And one thing that I understand so far no one really touched is the real elephant in the room is exactly this kind of applications for the EU funding. Even ourselves as an organization, I can tell you that at some point, I think we looked at a possibility, I think, to apply for a kind of a commission grant from the LIFE project. We finally decided not to because we literally didn't have time and resources to apply for it. Because when I spoke with the people who did, they said like, well, look, it's going to take actually you and another person from your team at least 1 month, I think, to prepare the application. And you have no idea what are the chances of getting it, by the way. So I'm sorry, but, I think this is the real problem. It's not about the rules like European sustainability reporting standards, which actually, investors need the data. Okay, it's not that we are, creating here the burden just for the sake of the burden. No, but at the same time, where we have a real unnecessary bureaucracy, like, in the context of this kind of grants, and then it even goes further. I can also tell you that, for instance, my family that lives in Poland, they consider actually applying, for some also, funding to support, the house renovation, the heat pump, the solar panels. At the end of the day, there is so crazy rules, which I think were also kind of, imposed at the kind of a national level. And, the ridiculous, entire process, and also some thresholds for, I don't know, the amount of income. So at the end of the day, my mother, who's a retired person and has, barely any money to survive, and actually I need to support her. But somehow it ended up that actually her income was too high to actually apply for that. So then I was thinking like, okay, who the hell can actually apply then? Because I have no idea. So I think there's, so many strange, I would say, things. And, I think, yes, things which we need to kind of resolve, because I think it's about actually the entire system and the pipeline, right? And also, for instance, I don't know, some people also, for instance, fearing and thinking, okay, yes, I think for the citizens especially, making huge investments for, into solar panels and other things. But then, when you look at the calculations, but then speaking exactly about here, I would say the infrastructure and the distributors, there is so much uncertainty because, with this energy, so, okay, fine, you get the solar panels, you make the investment, but then it still actually goes through the actually distributors, right? Because they are kind of buying the energy for you for a very different price, and then they are reselling the energy at a price which is actually the same as the fossil fuel price or even higher. So then you're thinking, and nobody controls that. So then you're thinking like, okay, so now I make a huge investment, but then I actually keep paying what I'm paying anyway. So at the end of the day, I think there are, really many, I would say, aspects in this, big puzzle that I think we need to all collectively actually look at and ensure that, it's all kind of, I would say worthwhile. But maybe also just to say, going back, here to the kind of a investors angle. In addition to that, I think what could be also quite interesting is to look at actually, can we tap on also the retail investors and kind of household savings, right? To, I would say, like if you look at some of the studies, even about better finance, there is actually huge savings that are actually stored very often on the bank accounts. So can we actually think also about creating products for retail investors that are indeed financing, also this kind of a transition projects, and that are also, offered at a relatively low price. And maybe the final word I'd like to mention is that eventually the important bit, of course, is still, the kind of a sustainability and transparency frameworks. So like, for instance, taxonomy, corporate sustainability reporting directive, European sustainability reporting standards, now also SFDR, so the Sustainable Finance Disclosure Regulation, which actually is being reviewed. I mean, obviously, these are also important elements that are basically aimed at increasing transparency and helping investors scale up investments in clean energy. And last but not least, I think, of course, investors, they need kind of stability also and predictability, regulatory stability and predictability. I think, while Omnibus has been kind of, aimed at, again, supposedly simplifying things, I think it just created a lot of chaos and instability for investors and businesses alike. So I think this is also something to keep in mind.
For shedding light on how the energy transition and the affordable transition towards affordable and clean energy looks like from the investor's point of view. And I mean, one thing on the importance of public funds, also to leverage also private investments. But it's an interesting point on the simplification. I would also kind of take out of what you said in particular that it's questionable in terms of the data, that you actually need, so that it doesn't really feed well into this process, because you need data information that is currently questionable if we would have access to due to the simplification process. But at the same time, there are other administrative hurdles when it comes to accessing funding from, let's say, instruments such as potentially Innovation Fund and others. So it's interesting to think about the simplification and what kind of simplification actually we need and where does it really add value. But indeed, happy to continue this discussion. But I would now like to give the floor to our two respondents. So starting with Davide Sabbadin, Deputy Policy Manager for Climate and Energy from the European Environmental Bureau. Thank you so much for joining us, and happy to hear about any, say, reactions or points that you found interesting so far, what we heard from the panelists.
Thanks, Stefan. I hope you don't mind if I'll be a little bit provocative, as just following my role. And thanks a lot for interesting inputs. Energy bills are going to be the talk of the families at Christmas. I think at the dinner table, it's really, really an very important topic. And also, of course, for industries that we heard, it's a really a critical issue about competitiveness. And so there are basically three ways to cut down on energy costs. The way we see it is, the first one is cutting energy demand, and so untapping the energy efficiency, which is the number one energy source that we should be untapping in Europe. It is 100% EU made, and the least we consume, the least we import. It's very simple. That's a mix of energy efficiency and renewable, as Sorcha correctly said. It's not always the case that you have to go all the way to energy efficiency or deep renovation if it's not making the business case. It's we like to call it independence kit. It's of course mostly electrification, so heat pumps, but in business and in families, in the households. But heat pumps plus geothermal, heat pump plus storage, heat pump plus PV, solar thermal, energy communities, you name it. There's a number of enabling technologies there that combined makes the business case better than electrification alone. And then, so cutting energy demand first, and harnessing renewable energy. And then you have to cut the electricity cost, which is the big problem across Europe. And then you can do that with a number of dedicated tariffs for heat pumps, for instance, or for electrification, and time of use tariffs and flexibility. And now here I have to say, Fernando, that DSO sometimes are the solution and sometimes are the problem, And I hear like very bad news, for instance, on this side. From country, I wouldn't want to say which one, but it's one where you have a very good pizza, and then you have Another solution is, of course, self-production. The third point is self-production, right? So from, of course, solar roofing for those who have access to roof, to energy communities, which we haven't mentioned, but energy communities are very important, not only from the consumption side, but also from the production side, because they allow citizens to take ownership of the process and the whole concept of energy transition. So they also help in the permitting side. They also have preventing fights on the local scale, so that, because sometimes renewable energy are just top-down exercises, and people don't see the value in that. So energy communities also provide a lower cost and electricity to those who are living in blocks of flats in the centers, or those who don't have access to roofs, or living in, for instance, in heritage buildings or heritage beautiful small towns that where our Europe is full of, right? And the last point I'd like to make is that all of that is certainly has to be reflected in the way we set up our support schemes, of course, at both the European and national level. But we are not going to have money for everything. I don't have to teach this to the European Investment Bank. Of course, you know best, and you don't have the time for everything. So, for instance, we should be steering away from what we call fake solutions. So things that don't have the business case. And let me name 3 of them, like the abuse of hydrogen. So hydrogen is needed for industry, but it's not needed for transport and heating and cooling. I'm sorry. And that has a very strong reflection on what kind of grids and what kind of investment you make. And carbon sequestration, the next big thing. It has been the next big thing for 30 years and never been proven the business case. And again, it's a lot of capital intensive investments. Capital intensive promises there that we should be steering away and be very wary of, or at least let the private money put the money where the mouth is. And the last point is the nuclear power plants. We've seen a lot of nuclear power plants recently, and none of them as a proven business case across Europe. It's too late. It's too long. We need other technologies, and we have to put the money where the technologies that are proven, that where the market is going, is where they are being promoted by the markets, and that's because we have really only 15 years to act on that. We're not saying that we oppose research and innovation. We don't say we oppose future development, but we're saying that this is not working now. These 3 technologies are 3 of the examples. Now, also going back to Agata said, unfortunately, these are always put forward through the word of technology neutrality. And so far, it's not that we oppose the concept itself, but so far, technology neutrality for us has always been a buzzword to cover business as usual, so basic fossil fuels. So that's delaying tactics that are going by the technology neutrality buzzwords, which is in itself not a bad concept, but the way it's being used, it's really not the way we like to hear of that. And then lastly, thanks, Aleksandra, for bringing back the topic to the MFF. That's going to be the litmus test to see where the money goes and whether they go in one direction or the other. Because I said money is limited, so it either goes one way or the other way. And for the simplification, and it's really, really important. We're going to have the social climate funds. There's going to have a lot of money going to be to low-income families. But if the way you have to apply for that is complicated or out of reach or not combined with the existing national subsidies, it's not going to work as planned, right? Thanks.
Thank you very much, Davide, for your reactions, and happy to come back to the panel with some of the points you also made. And also now to give the floor to Flaminia Bonanni, Senior Researcher at E3G.
Thank you very much, first of all, for the invitation, and as well to the panelists for sharing your insightful perspectives from the very different angles you cover. Maybe I would like to start by summarizing 2 core points that I saw have emerged during the discussion. The first one is that the direction seems to be very clear. So we are all heading towards a clean energy system because it's what we need to deliver energy security, to deliver competitiveness, but more importantly, affordable energy prices for households and businesses. And this comes, as you have stressed multiple times, with the challenge of de-risking investments But at the same time, it was very reassuring to hear that there is a combination of solutions, of instruments that we are developing at the public bank level, at household level, business level to move forward. And maybe in this sense, I would like to mention a research that we have done in E3G on how we can deliver affordable and sustainable housing, because as we mentioned, these two priorities have to go together. And there, what we saw was this combination of solutions in 3 different markets, France, Poland and Denmark, that we analyzed by interviewing different public and private stakeholders, real estate, public banks, local governments. So we really try to connect the dots there. And we saw that the common denominators to all these successes was really switching to these long-term investment logic, promoting more integrated value chains, adopting public-private partnerships, more innovative financial models. So this is something that I would like to stress because, as you mentioned, we have many tools in the EU now to really move forward with our objectives. So maybe the question I would like to come up is, what do you think is still missing to bridge these isolated success stories that also Sorcha before stressed and that we have seen in our research to then make these more an EU level transformation? So we don't need to pick up on single examples, but we can have a proper transformational wave in the EU. And yeah, thank you very much.
Thank you. Thank you so much, Flaminia, for these reactions. And indeed, quite a number of things we can already discuss in the panel. Maybe we can also come back and hear from you about some of the things we discussed now, and then I can be happy to come back to the participants. So you can, again, invitation to think about your questions, and for online participants to write your questions when you are ready and if you have something to add. But maybe I was thinking to come back to immediately to Fernando. I believe a couple of comments for maybe when it comes to energy distributors. So maybe now is the time to also provide some additional comments on your side.
Could I add a point to the DSO?
Yeah, okay, yeah, then that can fit nicely into it, yeah.
No, I have to admit, even though we have worked many years, the grid aspect has never been central to our work, but we do hear constantly that microgrids are complex because of the difficulties in sharing energy locally. So, I mean, talking to Positive Energy Housing Development last year, I won't say from which country, apart from the fact that they have good windows and good windmills as well. And that they basically had to break the law to link between buildings locally because the cost was just so high to just use the shared grid, even for a very small part of that grid. So could you explain a little bit to us how could we work to tackle this? It seems like a totally solvable problem.
And over to you.
Yep. Okay. Those are not easy questions. No, I think that obviously this is all linked around this whole idea of the energy sharing and how we could have energy communities, or you can call it energy communities, you can call it peer-to-peer. There are different mechanisms to share that electricity. And I think that in there, certainly the TSOs are working with the Commission in many of those initiatives. And recognizing that they bring some good things, especially taking into account that we are speaking about bringing the ownership back to the consumer, that they realize what it is. And certainly one big push is around the area of renewables. Okay, because saying you have plenty of areas where, for instance, you will not be able to put solar panels in your house, or Spanish coming from living in blocks of apartments, you don't have that possibility. Then this idea of sharing the generation in some way has been, I mean, it exists different models across Europe, and I think that is one of the big challenges at this moment, that is that each different country has done it in slightly different ways. And try to unify that is a bit of a challenge, and you have very different situations. Okay. Then when it comes to how do you pay for it, the the use of the grid. Again, here you have different solutions. For example, in Italy, the energy communities will recover part of the tariffs. The part corresponds to the transmission grid. Okay? In such a way that at the end of the day, they don't pay for that one. From the perspective of the DSOs, the question is around cost reflectivity. Okay, and that is how it should be approached to it. Yes, we fully agree that if they are not used in certain parts of the grid, maybe they don't need to pay for it. But at the same time, we have to keep in mind that, for instance, they don't use the transmission grid. And I'm representing NSOE more than the DSO entity, but they are not using the transmission grid. But at the same time, those transmission companies are the ones who need to ensure that the overall grid works. Mm-hmm. And even if you are using a very small part of it, you will still have that it needs to, the whole grid needs to work, okay? Because that's the big challenge. And with the microgrids, normally what happens with a lot of those microgrids is that they operate under the grid of the DSO. Okay, then how do we do the cost reflectivity and so on is something that actually, yes, the DSOs have a say on it, but it's coming from the regulators, mainly. We don't have much, but it is that. Certainly there is the question around other services that are linked with that. And I think that this is one thing that is a broader question that is a bit of about that lack of education around what it is what are the services that each company will be providing. Okay, for example, to the example that Aleksandra was putting before of some of the electricity is put back into the grid. In many cases, that doesn't go to the grid operator. That goes to your service provider. Okay, which is a different company. It is open to competition. You can change that. Okay, while the grid connection is unique. And the same thing with the service of the transmission operators. What are the services of the DSO? What it is that we really do.
No, thanks for this. I mean, for the last point, also on the links to the TSOs and also the regulator when it comes to micro grids themselves. So it's that kind of paints the bigger picture that we need to be mindful of when we have a focused discussion on clean energy affordability. Maybe just a question, like in terms of any good practices that you could observe across Europe about, let's say, where the regulation as well as when it comes to the microgrids or say public funding will help in this case for you?
I mean, I think that in terms of public funding, I think that many of the large DSOs certainly has loans with the European Investment Bank. Okay, then in that respect, it has certainly happened. With the recovery fund, a lot of those funds, for instance, in Italy, they were used for facilitating the improvements in efficiency in buildings, and which at the same time is something that improved the situation for the grid. Okay, if you have a smaller demand, means that you need less of an urge for investment, and also you have less problems managing your grid. I mean, in that respect, those are examples on which you could use, or that the funds have been used in an efficient way.
Now I was thinking, Nicola, coming back to you from basically based on what you heard, so from the housing sector, the business sector, the investor sector, the DSO sector, and also coupled with the questions and comments also on the scalability of some of the initiatives, for example, if you have any additional reflections building on your initial intervention.
Yes, thank you. I admit it's a very, very interesting panel, and I appreciate also the contribution from the respondent. May I start? I mean, because I like provocation, I want to react to the provocation. So, regarding the last point that Davide made on which technology to, I mean, I would say at the European Investment Bank, we would fully agree that the technology that don't make sense, we should not support them, right? But the question is, what are these technologies? Now, maybe I just would like to explain that in the bank, we have an entire directorate, overall 600 people, 150 in the Energy and Environment Department alone, of engineers and economists, whose task is to do a technical economical due diligence of each individual project. So what happens to us, and this is a bit singularity, I would say, across the panorama of all international financial institutions or multilateral development bank. We are more, let's say, we invest a lot in this type of assessment, exactly because public money are very limited. Although the IB is the largest IFI in terms of volumes, but still remain a drop in the ocean, if you want. There's much more that needs to be spent than what we are able to support. But why do I talk about this directorate with all the engineers and economists? Because they are doing exactly what you were mentioning, to eliminate from the screen, to ensure that the public money go to support the project that makes sense. My reaction is that I cannot say today and generalize the fact that hydrogen, carbon sequestration, and nuclear are not the right technologies. We need to analyze in each case, first of all, we need to keep a technology neutral approach to things, right? We don't dispute whether a technology is better than another, but we will analyze it in the specific domain where it is applied, and we will verify whether this is the best technical and socio-economically viable solution. And we, of course, there are projects in hydrogen, in carbon sequestration, in nuclear that we have rejected because they didn't make technical economical sense. But we are open to invest in any of these technologies, like we are open in investing in all other technologies, excluding those that use unabated fossil fuels, and this I said it at the beginning. We need to analyze it on a case-by-case basis. And if the technology that we choose is the best, for example, probably there are certain areas where the use of hydrogen is worse than other solutions. But there are also, for example, difficult to decarbonize sector where maybe hydrogen is the best solution. I don't want to say it in advance. I don't want now to do the discussion because we would enter into infinite loops. But I just want to clarify that the vision that we have and the position that we take at the European Investment Bank is that we are technology neutral, and we will analyze the technology on a case-by-case basis, project by project, and we see whether the solution is the best for Europe. And we want to make sure, another point that you mentioned, innovation. I also fully agree. Innovation should be supported for the technology that could make sense, especially because I think in Europe we should put an accent, and the European Investment Bank is trying to do the best for it, to develop our technologies. Because if we develop our technology, we also be able to sell them to others and not necessarily buy them from others. I close here. I mean, there are many other points, but I think I leave the space to the other panelists. Thank you.
Thanks for clarifying your position, the EIB's position, when it comes to the approach to different technologies and the choice and how you're making these assessments. Please. Yep.
I just wanted very quickly also to react also to the last point of Nicola. I think that's a very important one. And I also drawing back, I think, Agata, you were showing us actually some, data, and you've been mentioning that, we already have higher energy prices than US or China, but the interesting bit is that both cases that you gave are completely different stories. And I think China here is a very interesting case, because I think even if, okay, we could have a completely separate debate on, I would say, the regime, right? But I think, honestly, these are incredibly smart, actually, commercially speaking, people. And I think they have done something which we failed to do. Thinking ahead. Currently, they control nearly 90% of the solar panels market, which is the technology of the future. So exactly speaking of, now we are largely actually dependent on China to actually buy the solar panels, or the battery thing. I mean, that has been the smart thinking. So actually, I think in case of China, because they already invested, more than a decade ago in the clean energy, yes, now they can benefit from the low prices, right? And even if you look within Europe, I mean, there are also cases like, I remember in Denmark, they've invested in clean energy like 20 years ago. So exactly, it's just like, I think, as Nicola said, we just have to, in Europe, we are a little bit, not enough thinking about the future, and indeed not enough investing in those technologies, and also thinking about yes, let's keep it in Europe. Instead, especially for instance, in some countries, there is more the tendency, okay, let's, sell to the outside capital. No, I think indeed we have to become more smart in terms of identifying the key technologies for the future. Also, again, speaking about the clean tech, right? Right now, I understand that a lot of clean tech startups and companies, even if in some cases there could be very interesting technologies, but exactly because I would say maybe it's small, and I would say the challenges with regards to accessing capital at a good price, maybe some of them are not even taking off. Which also brings me to another point. That I understand that part of the problem is that within Europe, we have different cost of capital in different countries. So, for instance, in Central Eastern Europe or in Southern countries, which are probably the countries that actually need more, I would say, this type of investments now for the green transition, actually the cost of capital for them is much higher. So this is, another problem. Okay, let's see how we can actually reduce this kind of a structural issues there. And the final point that I didn't make before, but I think is also quite important. Look, what is also very important for investors is price signals, right? So here, for instance, taxation, which of course we know that this is, really up to each country to decide. But I think indeed, setting the right tax incentives has always been a very powerful tool. But that also means, well, we need to remove the fossil fuel subsidies, because I'm sorry, but this is just distorting everything.
Thanks for pointing this out, indeed. And one thing I would say is on clean tech, it's also just interesting when it comes to our, say, the topic of today is that while countries like China are now leading on many, say, clean tech solutions, and this is a relatively recent development, by the way, linked to also the investments and policies they've chosen. For example, the EU and Europe is still leading on some of them, like heat pumps, and for now, which is also crucial for this shift to say the clean energy in our built environment, so to speak. And then the question is to what extent does this also translate into your prioritization, or do you see any financial opportunities, or so to what extent is when we talk about economic security and energy security, and if we depend also on clean tech from other countries versus the clean tech we have here, does this, or do you see that this can translate into any more tangible financial risk that is that can guide the investments in the future? What is the link between, let's say, economic energy security linked to the clean tech made in Europe or within, say, more reliable supply chains versus the one that we are getting from somewhere else where we don't know how things will be? And let's not forget, just of course, I guess we already in a way mainstream the topic of the discussion, that quite a lot of this that we are discussing is linked to the Russian invasion, of course, which triggered huge energy prices that were not like that before that invasion. So we are responding in a way to by and large to to an external shock linked to the security agenda, notwithstanding, of course, the climate change and the crisis and the catastrophic effects it will bring on its own. But there is also, just to say more closely, the security issue that triggered quite a lot the discussions that we have and the challenges around affordability. So I don't know if this kind of translates into any of your considerations when it comes to investments, the risk and financing.
Well, I think definitely. And as you said, even yourself, I think here the story with the energy prices that have risen so much, I think this is just, a very good example of Europe's short-sightedness, right? Because exactly as you say, when you overly depend on actually certain, goods or services from abroad, and unfortunately, yes, I mean, you're giving away a lot of power, and yes, there are the risks. What happens if suddenly, at some point, yes, exactly, they start to, dictate the prices, which, eventually become, too high. Or what happens also, yes, if there are some political issues like, yes, with Russia, and then suddenly what do you do, right? So, yeah, and I think, especially in this context, as you're saying, like, yes, I think we should cultivate and have also more, I would say, fintech solutions, I would say here in Europe, but exactly, in terms of the energy, yes, we definitely need to rely also and have more of our, I would say, internal sources and be more independent, which, well, to some degree has been already tried to address, or it's, let's say, underway. But again, indeed, much more can be done, and especially with those, I would say, exploring further the renewable solutions. But yeah, I fully agree with you. And there are also even, I would say, some further risks in terms of over-reliance on products and services and technologies, I would say, from other jurisdictions is, as you said, kind of supply chain risks, right? So, for instance, also the risks that, okay, maybe, even from the reputational or whatever else perspective, also like, I don't know, risks about, human right breaches or whatever else, right? So, of course, these are also certain considerations. But yeah, I fully agree that, of course, that increases the risks for Europe and investments here. So we should better mitigate them.
Thank you. And now back to Sorcha and to Agata. So happy, first of all, to hear any additional comments or reactions you have from what we heard thus far. But I would also like to kind of introduce also some, say, two related questions. One is on indeed any comments you have on the energy taxation discussion, and the other one is, of course, the ETS2, which relates to both households because of the fuel that would then be subject to this arrangement if it's finally being implemented, but also it relates to some of the companies that would be covered beyond ETS1 under part of this. And of course, there is the Social Climate Fund, and how does this affect our discussion on affordable clean energy? Sorcha, maybe we can start with you.
Yes, so we have good examples in Europe. Carbon tax in Ireland has been extensively used to renovate homes of people at risk of energy poverty. Unfortunately, the amounts that we're looking at in the potential social and climate fund in most countries are not sufficient. So we've been pushing for quite a long time to really increase. So we're only looking at 25% of that fund that's going to be going into those projects. So to really increase the amounts going into the social climate fund, I think we need to invest here. I mean, if we look at the success stories, and Flaminia, you mentioned we have to scale up. In some countries, these is already really scaled up. I mean, France, we're talking about 5 million units that have reached an average of B, and it's because they've had zero interest loans, and they have been able to use subsidies, also EU subsidies. So that I think also there's a myth that we can do that only with financial instruments. I think, and we will be saying this also in the next MFF, that the role of subsidies, which are then blended potentially at local level, not necessarily always blended at the EU level because it can be more pricey, but the EU subsidies can really give that push to action at local level. And again, in Austria, it's also not a small scale. I mean, 90% of the homes in the limited profit sector, and the limited profit sector are producing at this point 50% of the new homes. So it's instead of extracting that profit, it's being reinvested into new homes by law. And I think I think if we are relying on the market alone for this huge challenge, these double challenges of the housing crisis and the energy crisis, I mean, we see also if the DSOs for market or covering cost reasons are actually essentially blocking the potential of local energy production, how fast are we going to get to where we need to go? So it's we need public funding, public ownership of this challenge. I think we're not going to get far enough. And again, these examples are scaled up. We show we can do it with the right business models in at scale in Austria and France, for instance. And I think this has to be the clear message. So a larger social climate fund, and then obviously now we've delayed the ETS by a year, which I think for some of our members they're actually relieved, because very often they are managing homes where individuals or they don't have the capacity or the agency to actually change the polluting heating systems or the funding. So indeed, there's the ETS can definitely potentially be very punishing for low-income groups. Obviously, we saw with the Ukraine war that this jump in prices was then across the board and was very, very punishing. So I think now we have a chance. We have an extra year. We have heard that the Social Climate Fund will go ahead as planned with the same amount of upfront funding. So to attempt to address the structurally the causes of energy poverty will be crucial. And then going forward, so also cohesion funds. I mean, we now have the option to double the amount of funding that can go into energy retrofit in this period. So we're radically pushing that, but it's quite difficult to have changes halfway through the period. But some countries are going ahead with that. And for the next MMF, yes, the debate will go on, but we see that housing and energy efficiency has been identified as one of the priorities, but this will depend now on the national regional reform plans, and what will the KPIs included there be. But I think for all of this, the strength of the local governments, the strength of the local capacity to implement change, because if we look even at Social Climate Fund, we see Bulgaria very high up, but there is actually very limited governance on the ground to implement a fair energy transition. So there we would also need capacity building potentially through EIB and structural funds to actually give the capacity at local level for something to happen, because at the moment there's a vacuum. So this is the other issue.
Understanding what you said, the importance of capacity building and also financing that these projects. And then, Agata, happy to hear from you.
Yeah, thanks a lot. And I think many interesting points were made. I will pick up on two related to energy. One around technology neutrality, and thanks for the provocative comments. I think for me, the overarching goal that we have in Europe is reaching climate neutrality and reducing GHG emissions. So if this is the goal, we should think about how to do it in the most cost-effective way. I think this is where we would agree. I do think the principle of technology neutrality is not just a principle because it's a nice principle, but it also reflects a bit the technological and geographical constraints. So I think, the technological constraints, if, all industry could right now, pick up the most efficient solutions and it will be cheap and it will work, I think, there's no reason why they wouldn't do it. So I think it's more that in some solutions, are not existing for certain sectors. They're more expensive, but of course, I think it's more related to the existing constraints rather than wanting to go for something that it's more expensive because it's also not efficient. Same with a bit geographical constraints. So there are countries, I think Aleksandra mentioned, like Denmark, Ireland, that are investing a lot in offshore, also with government support because it's also financed by CFDs. Not all countries can do that. Not all countries have the starting point. I think Nordics have, for instance, very relatively cheap and affordable energy prices, but they also invested a lot heavily 20, 30, 50 years ago in hydropower and nuclear, again, supported by state. Not all countries have that base. So, it's more to really think for Europe as a whole, how can we, in the most, again, cost-efficient way, but also reflecting the technological, geographical constraints, make sure that, we transition and we reach the GHG emissions, especially in the transition phase. I would still argue more about the importance of still innovating and investing in clean tech sectors. I think it was IEA that mentioned that reaching climate neutrality by 2050 will be done at least 50% with technologies that are not yet on the market today. So I think there is still a lot of potential, and because the scale of the challenge is too big, I think we cannot restrict ourselves to or close ourselves off to what we have now. And then the second point on marginal pricing, because I think it's an interesting discussion. I don't know if we can go back to the slides, but you will see that in the managed transition scenario and our scenario where we have the higher share of electricity, this later translates also to lower energy prices. And this is exactly because electricity and renewables push out fossil fuels from the transition scenario, especially in the long term. So I think we see very much the impact of fossil fuel prices on electricity prices. I do think, at least for the next coming years, it's more a fact. It's the constraint of how far we can really push and how fast we can push on renewables. And yet this is where the role of instruments like PPAs or CFDs that really stabilize the price and try to, as much as possible, dealing this impact of gas prices on electricity prices really plays a role, at least in the short term. So indeed, to not have this influence, which is indeed there. And I think JRC from the European Commission also estimates that for the coming 10, 20 years, realistically, gas price will be setting price of electricity. So, I think in the short term, this is about trying to delink the two with different kind of instruments like PPAs, like CFDs. Yeah.
Thanks. And maybe just if you have any comments, anything you can share. Also, we discussed the questions around the ETS2 and its developments and its implications. But I will also add on top the proposal on the, for example, European Competitiveness Fund, which we still need to see, of course, how the discussion goes also with the member states. But we have what we have at the moment, and I don't know if there are any. If you have anything that you could share on behalf of Business Europe, any prospects or challenges with the instruments, with upcoming instruments?
I think it's an interesting proposal from the Commission. We are discussing it with our members, so the discussion is ongoing. I do think in general it's a bit what EIB mentioned, that public funding will not really do it all. So, it's really just a drop in the ocean. And in our view, in general, public instruments, and this is also state aid, where it comes in, should be really used to de-risk the projects that need de-risking, but in a, again, targeted way. Because indeed, I think we see the role of private investments that are needed to finance the transition. I can say from the energy angle, the increase for the Connecting Europe facility is very positive, because also speakers mentioned it, but we have the challenge of investing in grids, and we also see in our scenario that over the long term and in general for Europe as a whole, investing in infrastructure is necessary to get to lower energy prices overall. At the same time, this might mean that some consumers will also need to pay more for instance, network tariffs. So it's about how to take that cost away or minimize this cost as much as possible. And this is also where EU funding can really step in to basically cover part of the cost to make sure it doesn't all go to consumers. So I think the Connecting Europe facility it's a very good proposal. Also, that it really focuses on projects that matter for Europe as a whole, for interconnecting Europe, for integrating the electricity market. And for the rest, indeed, I think sometimes we like to talk about these funds as the kind of things that will do it all. But I think we also see that it's great to have these funds, but it's also a bit, the role is limited. So it's really about overall policy framework and how to make sure that businesses can still invest and there are no barriers to investing.
Thank you so much for these clarifications. Also, how do you see also the instruments and the role of these upcoming instruments? Now, I was wondering if maybe some of the participants would like to add with any questions or comments at this stage? Anybody at all? Yes, please.
Good morning, everyone, and thank you for this very interesting panel. I had a question maybe more for you, Agata, regarding your 3 recommendations. So if I remember correctly, if I noted correctly, the second recommendation was basically like increase the deployment of renewables. And the third one was because there will still be that gap between wholesale energy prices between the EU and the third actors, starting with the US, even if we achieve a very ambitious transition, as you mentioned, with your scenarios, there will still be some energy competitiveness measure needed. And I was wondering if you could give some example of these, because I'm quite curious about this. Thank you.
Are there any additional questions from our participants that we could take before we slowly wrap up with this discussion for today? First, second chance, last call. No, not. Yeah. If you have a question, yeah.
On the grids package, do we think that this will actually be a step forward for energy communities?
Open question, indeed. Yeah, so I think with these 2 questions, we can feed that back into the panel, but I would then suggest that we turn it also into, say, last comments, also key messages for the way forward, summarizing what we discussed thus far. And maybe back to you, Agata, you can respond to the questions that you also received, especially for you, and then it's a chance just to deliver any final message from your side. Yeah.
No, thanks for the question. I will be short at first. We don't have one solution to manage this energy competitiveness gap. I think it's not realistic to have one, and it's not possible. So this is why we'll probably need a toolbox of measures, and we already have different policies at EU level. This is, for instance, from the carbon leakage side, CBAM, indirect cost compensation as well, that looks into that. So, for instance, I think from this side, we could think about extending carbon leakage measures to, for instance, investment leakage as well. There is more the energy side where, for instance, there are network tariffs that will likely go higher. So should we, think about a way to reduce the exposure of industries, especially those that are competing internationally, to paying these energy infrastructure charges? This is also all about the right instruments, but I think it's more of a toolbox. We will likely not, as much as I wish there was just one solution, I think it's a bit unrealistic, and we'll probably need to build on what we already have in the toolbox and expand it further. And on the grids package, also just to mention, I think it's positive that the Commission put forward a number of provisions to really simplify the permitting processes, because we see that around half of energy infrastructure projects deployment is spent on permitting and administrative procedures. So I think it's a positive step forward. Again, there is this issue of funding and cost for consumers, but in terms of also the principles for further European integration of the energy market as well, I think this is a very positive step.
Thank you so much. And Fernando, then over to you. We can also considering I guess if you have any comments, anything, a light touch on the grids package or anything that you can integrate into your final message, that could also be interesting. Thank you.
Yeah, thank you. I think that to the question of whether the grid package will move the energy communities, I mean, it came out yesterday. I have not read it in detail, but my understanding is that it doesn't really cover much topics that will be relevant for the energy communities. I mean, the question will be around connections, things like that, facilitate connections, but they always go, my understanding is that the package goes into how do we make it in such a way that it's easier to connect. It doesn't say anything about how much it costs you to connect, okay, which is something that we will expect that is coming in future parts of the package. And I think that, if I'm not wrong, the Commission is working on a different package in which we And I think that in that areas where we can expect a bit more anything related with energy communities, okay, or energy sharing, not in this one. I think that in terms of some of the comments that I have been hearing, I think that one important thing to keep in mind is that at the end of the day, this is a zero-sum game, in the sense of we can try to facilitate energy sharing, we can provide that industry doesn't need to pay for the grid, but at the end, someone is paying for it. Okay, meaning if we are discussing about affordability, it's affordability for whom? Okay, and if it needs to be for everyone, then that's why we keep indicating that, well, normally we will expect that the costs are linked with what you, with the cost that you generate. I mean, the price are linked, at least from the network point of view, to the cost that you generate. And in there, you have the issues around, well, how do you set that exactly, and what are the right cost drivers? Okay, I understand that, for instance, connections can be relatively cheap, but in some places they are very difficult to build. There is also the question around, well, once that you are connecting someone, you need to upgrade the whole grid. If it's a small household, maybe not, but if it's heavy industry, you will need to reinforce the whole grid. And the question is, who is going to be paying for that? Okay, because if a heavy industry needs to pay for the whole thing, yes, it's going to be a lot of money. But otherwise, what it ends up happening is that all the consumers will end up paying with it. Okay, in that answering a bit to the challenge around the use of nuclear. I think that from the perspective of DSO, certainly renewables are the way forwards, but obviously operating a grid that is only based on renewables is quite a challenge because it's much more volatile. And you need something that will provide you this kind of base, more stable system. Because I'm an economist, I have to say it. It's more for the engineers to discuss, but you certainly need something. Then in some countries they have gone nuclear, some countries they have gone for gas. If we say no to nuclear, no to gas, you end up with the risk of a high volatile grid. Okay, and you can end up with a lot of problems in there.
Exactly, that's what I was thinking.
That is, but also that comes at a cost. Yeah.
No.
And that's the thing of, yes, if you can store. The question is, how do you store, for instance, from winter to summer or summer to winter? There are all other problems in there. There is no perfect solution. That's the.
No, it's an ongoing discussion also the storage and also how to think about the right mix, but just as long as we, I would say, stay true to the ambitions we have on climate and on the clean energy transition, which, as we discussed before, links to competitiveness as well, but we need to address the short to mid-term costs. All of that, no stress, we can do it. It's step by step, I would say. Nicola, maybe over to you for, say, your final reflections for today.
Yeah, I would reiterate what I said at the beginning. Our vision, our strategy brings together three elements. On one side, competitiveness and affordability. They go hand in hand with climate action and sustainability. But also, I'm pleased that has been mentioned again. Let's not forget the issue of security. The good thing is that all these elements, they can come together, and they are not in contradiction with each other. We can, with the same investments, we can tackle these three issues at the same time. And maybe one last word on the fact that this transition has to be just. It's been mentioned already, but I also would like to repeat that everybody should benefit from an energy transition. We should maintain or create new jobs. We should reduce the energy bills. We should make Europe more autonomous. And all these come together, and everybody can benefit. On this, maybe I could mention, just as a last point, I spoke about many products. We're also working on a front-loading facility for the ETS2, so that we can help the housing and the transport sector, particularly low middle income households or medium small enterprises, to tackle the investment needs. But because the auctions, as you know, start in 2028, we could start helping member states to invest in 26, 27. We're still working on that. Thank you.
And Aleksandra, any final message from your side?
Well, I think my overall message would be that let's take the opportunity of the MFF and indeed, the various instruments linked to it, indeed, like also the competitiveness fund, the social climate fund. I think that this is, really the great potential right now we can exploit on. And exactly, let's just keep in mind that industrial decarbonization and just transition, they go hand in hand with competitiveness, okay? And that we should not be fixating on the short term. We have to think about mid to long term. But indeed, as Nicola mentioned, I think, yes, this is a just transition we're talking about. So at the end of the day, all of us should benefit from it.
You and Sorcha.
I think one of the key points, I suppose, if we look at the whole storm on social media in the last couple of weeks, the attacks from the US, I think in a way we should be proud, because what the US really don't like about Europe is the fact that we have regulation, we have standards which protect quality of life, and we have, relatively speaking, still a higher quality of life. So I think this energy transition has to be, we have to convince residents, when I talk about residents, because we work on housing, of course, that this, the cost of this is not going to fall on their shoulders. So they have something to gain from this: more attractive neighborhoods, greener neighborhoods, lower bills, better housing. So I think this showing that this, where we want this to lead to, is very crucial, and to meet people where they are. And where they are, of course, at the moment is, as was mentioned by Davide, struggling with energy bills. So I think we always have to have meet people where they are, and have the let's say, the objective of where we want to go, have to clearly communicate on that. And indeed, regulation. This is where Europe is strong, and we have to stick to our ambitions when it comes to the Green Deal. But of course, ensuring that the efficiencies that are gained are passed on to consumers. And the only way to do that is through regulation. So we will gain a lot of efficiency, of course, through AI, through better, more efficient management of grids, smart grids. But the trick is to make sure that it's passed on and it's reflected in people's actual bills, because very often, I mean, there was talk of PPPs. Depending on how PPPs are designed and rolled out, let's say the interest is not necessarily on the side of the consumer. So we have to be quite careful about that as well. So yes, keep the consumer gains from this transition to be our priority.
To make sure we keep people on board, also when it comes to the energy transition and the housing sector, but also widely, is indeed necessary and makes sense, and it's necessary to ensure that this transition really takes place. So no, I think we had I would say a very good discussion. We covered quite a lot of ground in the last 2 hours, and a number of things to bear in mind. Of course, about the importance of investments, that public investments are only part of the solution, but only a part of the solution, and that we also need to see how do we bring in additional investments, well, when it comes to shifting to renewables, but also energy efficiency, and just also addressing the demand to begin with, but also then shifting to other cleaner sources of energy. It's important for sustainability, it's important for competitiveness. There is also security-related risks, what we discussed about, clean tech, but also just the arrangements about the LNG that we had and bringing in the discussion with the US, that it's also the fact that we are using these energy sources is also linked to the fact that we can kind of end up in this kind of challenging situations with this trade arrangements, but kind of don't necessarily add to our decarbonization efforts. So the security aspect is part of that it links to housing, to businesses, to distribution, but also to transmission, more broadly speaking, to regulation. There are good practices that I think also gives hope. There are good investment projects to bear in mind, but it kind of reflects also the complex nature of the EU's energy governments and the EU itself, that it varies a bit on the regulator, on the member state. You would have one or the other arrangement. So it's important to think about regulation in a way that it really adds value when we think about rules or procedures that are more difficult or so, that we see that they target the sectors that can help us unlock these investments, not just in terms of quantity, but in terms of ease, that it is efficient and that those who really need these fundings can access them when they, of course, are, say, in alignment with what we're trying to do with the EU's European and global public good, I would say. But lots of challenges ahead, but there are lots of prospects ahead. We have the grids package. Let's also go back to it and see how we can, crunch it and see what are the takeaways for this topic, but also more broadly when it comes to the clean energy transition. But for now, we'd really like to thank our speakers for today and our participants for taking part in this discussion. We will, of course, continue working on energy-related topics looking ahead, and we'll be very happy to have you continue this discussion also as of next year. But for now, I said, let's also good luck with wrapping up everything you have for this year, and also wishing you a good winter break, and then we continue with the work as of then. Thank you. Have a nice day.